Hey there, grade 12 learners. Welcome once again to yet another lesson on accounting. In today's lesson, we are going to focus on the cash flow statement. So we're going to be looking at cash flow together with some interpretation. Interpretation, we're referring to ratio analysis. Without wasting any time, let's go straight to a typical exam type question. Right, I'm going to read through the entire question. We're going to make a few notes as we read. The financial year of Barcelona Limited ends annually on the 28th of February. The company has an authorized share capital of 1.2 million rand. The share price on the JSE is currently trading at 2 rand 5 cents each, and this was on the 28th of Feb 2003. Now remember guys, when we talk about the share price on the JSE, what are we referring to? Exactly. We are referring to the market value. Okay, so let's make some notes just so that we remember. JSE refers to your market value. Let's go on to our instructions. 1.1, we're going to complete the note, reconciliation of net profit with cash generated from operations as at 28th of Feb 2003. In other words, note 1. Thereafter, 1.2, we then going to calculate the amount paid to shareholders for dividends for 2003. We are then going to move on to complete the cash flow statement for the year ended 28th Feb 2003. Next part of the question, calculate the net asset value per share again for 2003. So 2003 is obviously our current year. Okay, next question, 1.5. David offers 5,000 Barcelona Limited shares. Mercy offers him 9,800 Rand for his shares. David is not sure whether to accept. Should David accept Mercy's offer? And you are required to explain. So obviously, this requires some kind of interpretation. Right, we've read through the entire question. Now let's look at the information that they are giving us before we start answering our question. Okay, so the information that we've got starting with an extract from your income statement for the year ended 28th Feb 2003. So very quickly, we've been given cash sales, credit sales, we've got interest expense, depreciation on equipment, depreciation on vehicles given to us, so there's absolutely no calculation here. Net income before tax, and then we've got net income after tax. Right, grade 12s, you've been doing cash flows, and you know if you are given net income before tax, net income after tax, the difference there is obviously your taxation for the current financial year. So without even reading further, I am going to make a note of my taxation for the year 2003. Let's do that calculation before we move on. My taxation, this was my net profit before tax. This is my net profit after tax, 68,550 Rand. So the difference has to be my taxation. Right, let's go to our calculators. So our net profit before tax is 131,826. There's my net profit before tax, guys. And then I am subtracting my net profit after tax, 68,550, to give me the taxation for the accounting period, which is an amount of 63,276. Let's just check that. Yeah, that's correct. Right, let's move on to the next bit of information. Then we are given our list of balances on the 28th of February. In other words, list of balances coming from your balance sheet. Remember guys, if we're preparing a cash flow statement, we need to have the income statement for the current year and then some information from the balance sheet of the previous year as well as the current year. So that's what they've now given us. So let's now go to the information. 2003, always make a note for yourself that this is my current year, or this is my current year, and then 2002 was obviously the previous year. Right, let's move on. Looking at the information very quickly, they've given you tangible assets, then you've got inventories, okay, and inventories, they tell you stock only. Below that, consumable stores or consumable stock on hand. Now remember guys, at this point, inventories is made up of stock plus consumable stores on hand. So I'm going to make a little note that when I'm doing my cash flows, I need to add these two items. Then I've got trade and other receivables, and they're asking me to refer to note number 2, cash and cash equivalent. So bank is obviously favorable. I've got favorable cash and cash equivalent, ordinary share capital, retained income, and then I've got a mortgage loan. The last item, trade and other payables. The next bit of information, which is very, very important, note the par value of shares is 1 Rand 50. So I just circle that because I know I'm going to need the par value. Right, and then finally the rest of my information. I've got the extracts from the note. So note number 1, tangible asset is made up of vehicles as well as equipment. Again guys, they're giving you 2002, the carrying value, together with 2003. So I need to make a note of that. 2002 is beginning of my financial year. The end of the previous year becomes the beginning of the new financial year. 2003 is my current financial year, and I'm going to make a note that is the end of your financial year. Note, motor vehicles were sold at book value, but no vehicles were bought during the year. So we did have vehicles that were sold. The next bit of information, equipment was bought, but none was sold during the year. So we've got equipment that was bought or purchased during the year. Right, as we go on to the rest of the notes, we've got note number 2, trade and other receivables. Included in the 2003 figure is an amount of 15,540 Rand for SARS income tax. Now remember guys, this information again is important. We're going to come back to that information. Okay, the rest of our information, information 3, trade and other payables. We have given a breakdown of trade creditors, SARS income tax, and then I've got shareholders for dividends. Again, I'm going to remind myself 2002 previous financial year, so these become my balances at the beginning of the year. 2003 end of the financial year or the current financial year, these are obviously my year-end balances. Right, we're now ready, grade 12s, to start with this question. So let's start with the first question, which is complete the note, note number 1 for your cash flow statement. Okay, let's just get our answer sheets out. And there we go. We're ready to go with our first question. We're going to start off with net profit before tax. And remember, this information was given to us. So let's go and extract that information, net profit before tax. Okay, your income statement, there we go. There's your extract from your income statement. Net income before tax, an amount of 131,826. So let's take that amount through and let's fill it in. Net profit before tax, or net income before tax, an amount of 131,826. To this amount, we then need to make some adjustments, and I know you guys know your format by now. You need to make an adjustment for, firstly, depreciation, and thereafter an adjustment for interest paid. Right, again guys, where do we get this information from? From the extract of the income statement. So let's start now with depreciation. Depreciation given to us, depreciation on equipment, there's our amount there, 67,650. Sorry, that was vehicles. Depreciation on equipment is 65,340. So there's my amount. And then depreciation on vehicles, 67,650. So we're taking these figures through to note number 1. So let's go for it. Note number 1. Depreciation, remember guys, your bracket work, absolutely important. So in brackets, depreciation on equipment, an amount of 65,340, plus my depreciation on vehicles, an amount of 67,650. Okay, again, let's get our calculators out. So we are adding 65,340 plus 67,650 to give me an amount of 132,990. So let's enter that. Depreciation 132,990. Let's just check that quickly. There we go. Okay, right, depreciation, we've now entered our depreciation. We're going to make an adjustment for it. Do you guys remember why we're making an adjustment for depreciation? Okay, absolutely correct, because depreciation is a non-cash item and it needs to be added back to your net profit. Let's move on now to the next adjustment, interest paid, and again, back to our income statement. My interest paid given to me as 78, there we go, 78,000. Okay, so depreciation done, interest paid, an amount of 78,000. Right, let's now add back these two amounts to get our operating profit before changes to your working capital. So let's get the calculators out again. Let's clear this. We are going to take our net profit before tax, 131,826. We are now adding back depreciation because it's a non-cash item, and then we are also adding back interest paid to get operating profit before changes to working capital, an amount of 342,816. Okay, so let's enter that. Operating profit before changes to working capital, an amount of 300, let's fix that, 342,816. Okay, let's just check that. Yeah, correct. Right, now we move on to changes to working capital. When we talk about working capital, okay, let's just find that quickly. There we go. Right, when we talk about working capital, remember guys, working capital refers to, you are going to look at your inventories. Then we're going to look at debtors. And thereafter, the last item, creditors. Okay, so we're basically comparing our inventories, our debtors, our creditors from the previous financial year to the current financial year, and we are asking ourselves, has it increased, has it decreased, what was the effect in terms of cash flow? So let's now start with inventories. Your three items, or the three items listed, starting with inventories, debtors, creditors, are all found in your balance sheet. So let's go now to the extract for the balance sheet. Okay, so let's move on. There we go. There's that extract for the balance sheet. Let's start now with inventories. That's the first item that we are looking at. Let's just change our color. Okay, there we go. Inventories. Remember when I was reading the question, I mentioned inventories is made up of stock plus consumables on hand. So we need to now add these two amounts before we take them through to note number 1. So let's start with 2002 and let's compare, or let's look at our inventories. 2002, our inventories is 89,760. That is our stock. There were no consumable stores on hand, so this was our inventory amount that we're going to take through to the note, that we're going to be comparing to 2003. Let's now look at 2003. My inventories, or my stock, was an amount of 180,820. My consumable stores on hand was an amount of 3,000. So my total inventories for 2003, I am adding, guys. I'm adding these two amounts. So let's do that. We've got 180,000 for stock, 820, plus consumables on hand, 3,000, to get 183,820. So let's just make a note of that before we complete note 1. So these two amounts added up gave me a figure of 183,820. Okay, right. So if I now compare my inventory for 2002, there's that figure, 89,760, and I compare it to 2003, can you all see there's obviously been an increase in inventory? In other words, we've obviously purchased a lot more stock. So let's now record this into our cash flow statement, note number 1, not the statement itself. So let's go to that note. There we go. So inventory, there has been an increase in inventory. In brackets, remember guys, I'm going to just show my bracket work above the word inventory. You need to show your bracket work. I'm comparing 2002 and 2003. So 2002, my figure for inventory was an amount of 89,760, and then 2003, if we compare our, or if we go back to the question, there's our inventory amount, 183,820. Okay, guys, that's a 0. I know you can't see it properly, but that is a 0. All right, let's take that amount through. Okay. Okay, so minus that 183,820. Okay, let's now calculate what is this increase in inventory. So back to our calculators. So we're taking 89,760 and we are subtracting 183,820 to get the increase in inventory, an amount of 94,060. Increase in inventory, grade 12s, I'm spending more money on stock, hence money is leaving my bank account. It is an outflow of cash. All outflows must be shown in brackets. So let's take this figure through. We've got an outflow, so open brackets, of 94,060. Okay, right, let's now move on to your debtors. Debtors, again, back to our information. back to our balance sheet or extract from our balance sheet. We're now moving on to trade and other receivables in order to calculate our increase or decrease in debtors. Trade and other receivables, remember they asked us to go to information number 2. So let's do that. Let's go to information number 2. Information number 2 goes on to tell us included in the 2003 figure is an amount of 15,540 Rand for SARS income tax. Now remember guys, when you are doing the calculation for an increase or decrease in debtors, we need to exclude SARS from the calculation because SARS is separately disclosed in the cash flow statement. So we now need to subtract this figure from our trade and other receivables for 2003. So there's that balance sheet, trade and other receivables. So from 2003, I'm going to just write it at the bottom here so it's much clearer. Let's change the color. So 66,950 is our trade and other receivables, but we now need to subtract that SARS income tax amount of 15,540. Okay, so minus 15,540. So let's work that out before we move on. Okay, so 66,950 less 15,540 gives me 51,410 excluding my SARS. So let's make a note of that. Okay, so the figure that I'm looking at is an amount of 50, let's just go back to it. It was 51,410. So that's the figure that we need to compare. Right, let's now look at our 2002, compare it to 2003. So 2002, our trade and other receivables was 74,100. 2003, it has now decreased. So there's been a decrease. It's now 51,410. So let's take this information to note number 1. Okay, so debtors, there has been a decrease in debtors, open brackets to show that decrease. So in brackets, we are subtracting 74,100 less, let's go back to that information quickly, minus 51,410. Minus 51,410. Right, let's get those calculators out and let's calculate the decrease. So we've got 74,100 less 51,410, and there's our decrease, 22,690. Now remember guys, when there's a decrease in your debtors, it means that your debtors are obviously paying their accounts on time or sooner. They're paying their accounts much sooner than the previous year, which means this is very good for the business, especially for cash, because money is going into the bank account. So it's seen as an inflow of cash. Inflow of cash must not be shown in brackets. So this amount, let's now record it. Remember, we're not showing this amount in brackets, an amount of 22,900, sorry, not 900, but it was 690. Okay, right, the very last item for working capital is our creditors. So let's now go to the information about your creditors. Trade and other payables, your trade creditors, that's what we're looking at. Trade creditors, 2003, 39,180, 2002, 17,984. So again, let's compare. We're comparing 2002 with 2003, and immediately we see that there's been an increase in your trade creditors. Let's now record this in our note. Okay, so there's been an increase in creditors. Again, open brackets, and let's show your calculation. We are using the amounts of 2003 and 2002, so 39,180 minus 17,984. Okay, so let's get our calculators out one more time, and there we go. 39,180 less 17,984 to give me 21,196. All right, let's record this. So we've got our amount of 21,196. Right, please remember, guys, whenever there's an increase in creditors, yes, it does mean you're not paying your creditors as quickly as the previous year, but what this does mean is that that money is sitting or staying in your bank account, hence it's seen as an inflow of cash. Right, almost done with the first note. Let's just finish up this note. Okay, so we're now going to calculate our changes to working capital. Guys, all we're doing, we've got a negative, we've got two positives. So when we do calculate this, we are ending up with a negative. I'm not going to take my calculator out. I just want to save a bit of time. So we finish this question. It's quite a long question. You're going to end up with a negative 50,174. Right, and then the final bit to the note, we are trying to calculate your cash generated from operations. Remember, that's the purpose of this note. So we take our operating profit before changes, this total, less changes to working capital. When we subtract, we're going to end up with an amount of 292,642. Right, done with the first part of the question. Few more to go, but let's now carry on. Okay, my next question wants me to calculate dividends paid. Now remember, guys, dividends paid, whenever the question tells you calculate, they are giving you an option of either using the note or to use ledger account. So you decide. I'm going to use the note. So let's look at the note, and if necessary, I might use some ledger accounts as well. The note for dividends paid, you start off with your balance that you are owing your shareholders at the beginning of the year. Thereafter, amount in financial statement, and then we end with your balance owing your shareholders at the end of the year. Okay, you guys, please remember, you need to write out the note in full. You are not allowed to abbreviate, guys. I can, but you obviously cannot. Right, let's start. Balance at the beginning of the year. What am I owing my shareholders at the beginning of the accounting year? So let's go to my information, and there we go. Trade and other payables. I've got shareholders for dividends. At the beginning of the year, I am owing my shareholders 37,966 Rand. So let's take that through to our calculation. Beginning of the year, we are owing our shareholders an amount of 37,966. This must be in brackets. It represents an outflow of cash. Amount in your financial statements. In other words, what is your ordinary share dividends for this year? Now, if we go back to our information or back to the question, you would find that we did not come across any information about your ordinary share dividends. So in this entire question, if we quickly scan through the question, okay, let's just go to that income statement very quickly. There is no additional information about ordinary share dividends. So which means, let's go back to the question. Okay. right, which means amount in financial statements is not given to me. So I'm going to just let that be an X. I have no idea what that amount is. What is that total ordinary share dividends for the year? Let's move on. Balance at the end of the year. Let's now fill this in. How much am I owing my shareholders at the end of the accounting period? So back to information 3. There we go. At the end of the year, we are owing our shareholders, there's the amount, 4,620 Rand. So let's take that through to our calculation. An amount of 4,620 Rand. Remember guys, this is not in brackets because we haven't yet paid our shareholders at the end of the year, hence it's seen as an inflow of cash. We haven't paid this cash out as yet. Okay, these 3 amounts, once I've added, once I've subtracted, I then should be able to calculate my dividends paid. Okay, but immediately I can't. I'm not able to calculate dividends paid because there's obviously an unknown. The amount in financial statements, this is the amount that I need to calculate first before I can actually calculate my dividends paid. So now we're going to have to calculate this amount. Right, let's now look at how we're going to calculate your dividends paid. We're going to have to try and make use of a ledger account. Do you guys remember the ledger account? I'm sure you came across it lots and lots of times. Absolutely correct. That appropriation account, that all-important appropriation T account. So let's quickly draft this account. Appropriation. Let's recap on this account. Remember, it's owner's equity. On the credit side, we record our net profit before tax. In other words, your profit and loss amount, because it's obviously an income. On the credit side, we also record retained income at the beginning of the year, because it's an income. On the debit side, how do we appropriate this income? A certain portion is for tax. Okay, then we've got another portion that gets paid out to our shareholders, ordinary share dividends. Aha. Okay, there's that amount that we want. Ordinary share dividends is that amount in your financial statement. So that's the X that we're trying to solve. And thereafter, whatever is not appropriated is retained. So we have our retained income at the end of the year. Okay, guys, you with me? All we're going to do is we're going to fill in this T account and we are going to solve for this X. So let's do that. Let's start off with net profit before tax. In other words, your profit and loss account amount. So let's now go to your net profit before tax. We came across this. There we go. There's that net profit before tax. So we're just taking that amount through. Okay, so my net profit before tax is an amount of 131,826. Now let's look at what is our retained income at the beginning of the year. So let's go to our question. Retained income at the beginning of the year should be in our balance sheet or extract to our balance sheet. Let's just quickly find that. There we go. Retained income, that's what we want. So there's my retained income at the beginning of the year. There's that retained income, 93,060. So let's take this through to the ledger account. So your retained income at the beginning of the year, 93,060. Right, we filled in whatever we needed to do on the credit side. Now let's go to the debit side. On the debit side, your tax, your income tax for the year. Income tax, let's go back to our question and let's go to the information. So your income tax for the year, remember guys, we did this calculation right at the beginning. There's my taxation. There's that amount, 63,276. So let's take that through. Your income tax, an amount of 63,276. Okay, Then retained income at the end of the year, back to the information. So retained income at the end of the year. There's my retained income end of the current year. There's that amount, 111,060. So let's take that through. Okay, so retained income at the end of the year is 111,060. Okay, right, now we can solve for this x. Let's just quickly change the color of the pen, because remember, this is my unknown. Let's now solve for x. How do I solve for this x? As accounting students, we all know if an account has been closed off, I add up whatever I have on the credit side, in this case, less whatever I've got on the debit side, and that's how I'm going to get my ordinary share dividends. So let's get those calculators out. Okay, so on the credit side, 131,826. I am adding, let's go back there, I am adding 93,060. And then on the debit side, I am now subtracting my tax, 63,276. And then finally, that retained income figure that we entered, 111,060. Okay, and there we go. There's that figure that was missing. My ordinary share dividends, an amount of 50,550. Okay, so that x, guys, that amount is, let's just write it down here for you, an amount of 50,550. Now, is this my dividends paid? No, it isn't. Remember, guys, this is that ordinary share dividends that was declared for the year. In other words, it's made up of your interim together with that final dividend. So let's now take this calculation through. So we can calculate dividends paid. That x is no longer an x, so we know what that amount is. It is an amount of 50,000, and remember, it has to be in brackets, 500 and 5,500 rand. Okay, guys, am I making a mistake here? Okay, let's just say that one more time. It's an amount of 50,550. There we go, 50,550. Right, in brackets, now I can calculate my dividends paid. So again, I'm just going to remove this x. In order for me to calculate my dividends paid, all I am doing, grade 12s, is I'm completing this note, because now I have all the figures that I need. So back to that calculator, 37,966. I've got two negatives, so I'm adding 50,550 less my 4620 to give me dividends paid for the year 83,896. So let's enter that as our answer. So our dividends paid is an amount of 83,896. Okay, right, easy, really easy stuff, guys. As long as you know your ledgers, as long as you know your notes, I promise you these are easy marks. Okay, right, let's now move on to the big one, the cash flow statement. We're now going to complete our cash flow statement for the year ended 28th Feb 2003. And remember, guys, at this stage, you all should know your format of your cash flow statement. So let's start with the very first part of your cash flow statement, cash flow from operating activities. We're going to start with cash generated from operations. Okay, you guys need to write that out in full. Remember, guys, this was note number 1, and we already completed note number 1. So let's go back to our answer in note number 1. What was the answer that we got? Our cash generated from operations, there's our amount, 292,642. Let's take that amount through. So your cash flow, cash generated from operations, there's your amount, 292,642. Right, then we're moving on. We're now going to take into account interest paid, because remember guys, interest paid was a separate item, separately disclosed on the face of the cash flow statement. Our interest paid, let's go back to our information, and we're going back to our income statement, extract of our income statement. Our interest paid or interest expense for the year, 78,000. So let's take that figure through. Okay, interest paid, an amount of 78,000. Outflow of cash, I'm making a payment, so it has to be in brackets. Next item, after interest paid, we now move on to, correct, dividends paid. So your dividends paid, this was the amount that we just calculated. So let's go back to our calculations. Dividends paid, there's that amount, 83,896. Okay, so let's take that through. It must be an outflow of cash. So in brackets, your dividends paid, 83,896. Right, just remember grade 12s, at this point, you probably noticed that I haven't shown anything in brackets. That's because there were questions where I had to do the calculations or complete the note. Therefore, I'm not showing anything in brackets. But if, for example, you are not asked to calculate dividends paid like we did in the previous question, then you need to show everything, your calculations in brackets. Okay. Right, let's move on. Dividends paid entered. Our next item is taxation paid. And for taxation paid here, guys, we need to show bracket work because we haven't come across taxation paid in a previous questions. So let's start with our bracket work. I'm going to open brackets and let's now go to the relevant information with regards to taxation paid. Okay, your taxation paid. Remember guys, I need firstly my tax that I owe for the current financial year. Our taxation for the current financial year, an amount of 63,276. So I'm going to start off with this amount. Okay, let's take that amount through. So back to taxation paid. In brackets, I'm going to show my tax for this year, an amount of 63,276. That's the tax owing, or that's a tax for the current financial year. Now let's go to your tax at the beginning of the year. In other words, were you owing the receiver any money at the beginning of the financial year? So back to your information. Right, at the beginning of the year, you've got SARS income tax. So at the beginning of the year, you were owing the receiver 31,350. So again, we need this amount in order to calculate our taxation. So let's now go back to our taxation paid. Okay, so we're now going to add on the amount at the beginning of the year, which is 31,000, let's just fill that in, 31,350. Okay, right, now let's look at what happened at the end of the financial year. Now please remember guys, when it comes to SARS, SARS can either have a debit balance or a credit balance. A credit balance if you are owing the receiver, but sometimes a debit balance if you have overpaid the receiver and as a result they are owing you, as in the business, at the end of the financial year. So let's now go back to our information and let's check what happened at the end of the year. So at the end of the year, let's now go to the relevant info. There we go. Trade and other receivables. Trade and other receivables, remember guys, these are obviously your debit balances. included in the 2003 figure is an amount of 15,540 Rand for SARS income tax. Okay, so what does that mean? That means that the receiver is owing us, owing the business 15,540. So we obviously overpaid the receiver. Okay, so let's now go to our calculation. Okay, there we go. So we've overpaid the receiver. So because we've overpaid, we are going to add on the 15,000 that we overpaid, 15,540. By adding these three figures, we are going to calculate the total amount that we paid the receiver. Okay, so let's get those calculators out. So we paid them a total of, let's start, 63,276. Then we paid the receiver what we were owing at the beginning of the year, 31,350. And then we are adding our balance at the end of the year because we've overpaid the receiver. So adding on that 15,540. Okay, there we go. We've got an amount of 110,166 Rand outflow of cash because that's the total amount of tax we've paid in the current financial year. So let's enter that. There we go, an amount of 111,166. Okay, let's just read that one more time. It's 110,000, guys, 166 Rand. Okay, almost done with the first part of the cash flow statement. We're now ready to calculate our cash flow from operating activities. So I just want to quickly change the color of the pen. This is the amount that we're now calculating. Remember, all we're doing is we are taking our cash generated from operations. We are then subtracting 78,000. We are subtracting our dividends paid, 83,896, and we are subtracting the taxation paid, the figure that we just calculated, 110,166 Rand. So after subtracting, you should end up with cash flow from operating activities, an amount of 20,580. Okay, grade 12s, we've just completed the cash flow from operating activities, the very first part of your cash flow statement. Let's take a short break. You guys probably can go and get something to eat or maybe go for a walk. And when we return, I will continue with this question. We will complete the cash flow statement. See you soon. Welcome back, grade 12s. Let's now continue with our cash flow statement. We're now moving on to cash flow from investing activities. Now, during the break, what I've done is I've written out the format because you guys obviously know the format, so we can go straight to our calculations. Cash flow from investing activities is made up of purchase of tangible assets, and then we're going to move on to proceeds from the sale of tangible assets. In other words, grade 12s, did we buy any fixed assets during the year? Did we sell any fixed assets during the year? Let's go now to our information. Tangible assets we've got given to us is the following. Motor vehicles were sold at book value, but no vehicles were bought during the year. So we did sell vehicles. And then they go on to tell us equipment was bought, but none was sold during the year. Right, let's now try and calculate. We know that as far as equipment is concerned, okay, equipment, we've made a purchase. So I'm just going to draw my equipment so I can do my calculations. And then I've got vehicles. There was obviously a sale. Right, back to the information that they're giving me. They are giving me tangible assets for vehicles and equipment, not the cost, but rather the carrying value. Now, in grade 10, you guys learnt that carrying value is calculated by me taking my cost minus my accumulated depreciation. That is what is our carrying value. In other words, what is the worth of your equipment, what is the worth of your vehicles. So in order for me to do my calculations, I'm going to use this information, the carrying value information. So I'm going to draw a quick T account for equipment, but I'm going to remind myself that these are at carrying value. Equipment, let's quickly change the color of our pens. Equipment is an asset, so remind yourself, an asset increases on the debit side, decreases on the credit side. At the beginning of the year, so my brought down balance, at the beginning of the year, guys, I'm looking at equipment. Beginning of the year, my equipment had a carrying value of 39,860. Guys, let's just say that one more time. 398,640. So that was my balance at the beginning of the year. My balance at the end of the year for equipment is an amount of, so let's bring that down, carry down balance, 556,050. Okay, so I've brought down balance at the beginning of the year, balance at the end of the year. Let's now go back to this T account. What will increase my equipment carrying value balance? Correct. If I'm going to purchase, if I'm going to buy any new equipment, my equipment is going to increase. And I've been told during the year I did buy. Equipment was bought, but none was sold. So equipment was purchased. That's the amount that I do not know. So that's going to be my X. Then let's look at what decreases carrying value. Carrying value decreases whenever you write off depreciation, or if you have to sell any equipment, that would decrease your carrying value. Now, we were told none of our equipment was sold, so there's obviously no sales of equipment, but depreciation, yes, equipment must be depreciated. So let's go back to our information that gives us the depreciation on equipment. There's my depreciation for me, 65,340. So let's take that through to my calculation. There we go. So my depreciation decreases my carrying value, and depreciation was an amount of 65,340. Right, guys, please remember general ledger. Once you have a balance brought down and a balance carried down, it means that my credits must equal to my debits. So if I'm going to try and solve for this X, all I'm doing is adding what I've got on the credit side minus, so I'm going to subtract what I've got on the debit side, and that would tell me how much of equipment was purchased during the financial year. Let's do that quickly. Let's get those calculators out. So I'm adding 65,340 plus 556,050, what I've got on the credit side, minus what I've got on the debit side. On the debit side, I've got an amount of 398,640, and that gives me that amount of equipment that I've purchased, 222,750. So that was the value, that was the actual purchase price of my equipment. Right, so remember, guys, that's the amount that I want. So I purchased equipment with a value of, I'm just going to write it at the bottom here, there's lots of twos, 222,000, let's just go back to our calculators, 750. Let's just check that quickly. There we go, that's my amount. Right, I now can take this figure through to my cash flow statement, so let's do that. Your cash flow statement, we've got purchase of tangible assets. Let's just bring that up a bit. purchase of tangible assets. Here, guys, I've got to show my calculations in brackets. So in other words, what I just added and then I subtracted. So let's just quickly show that in brackets. I took my balances, which was, let's just erase that quickly. There we go. So from that T account, guys, 65,340. I then added 556,050, and then I subtracted what was on the credit side, an amount of 398,640, to get an amount of purchase of tangible assets in brackets, because a purchase represents an outflow of cash. The amount was 222,750. Okay, right, easy stuff, guys. Please remember, in the exam, it's so important to show your bracket work, because if this amount is incorrect, I can get some part marks for whatever calculations I've shown in brackets. Let's now move on. Proceeds from sale of tangible asset. So back to my question. There we go. Did we buy any new assets during the year? Yes, we did. We did buy a new vehicle. Okay, there we go. Vehicles. So again, I'm going to draw a T account, vehicles, carrying value. Going to do the exact same calculation, but this time I'm trying to calculate what was the price of the vehicle that sorry, not the price of the vehicle, but what did I sell my vehicles at? So your vehicles, again, asset plus minus. Let's go back a bit. At the beginning of the year, your vehicles had a carrying value of 378,180. So I brought down 378,180. Then at the end of the year, my vehicles have a carrying value of, so end of the year is carried down, 270,930. Okay, again, back to that T account. We did not buy any new vehicles during the year. So under purchase, okay, we obviously didn't buy any, but the information clearly tells us that a motor vehicle or motor vehicles were sold at book value. So we obviously had a sale. So there's definitely been a sale, which would have decreased my carrying value. So that's the amount that I'm trying to calculate. Again, similar to equipment, there would have been depreciation on vehicles, which would decrease your carrying value. So let's go back to our question, your income statement information. Okay, and in my income statement, depreciation on vehicles for the year, 67,650. So let's take that through to that T account. Okay, so depreciation is an amount of 67,650. Again, guys, all I'm doing is trying to calculate the X. So this time, all my knowns are on the debit side. So I'm going to add up my debit side. I've got just that one amount minus whatever I've got on the credit side. And that is how I'm going to calculate the value or the book value of the vehicle that was sold. So let's get those calculators out. Let's clear this. So we're going to start off with 378,180, the amount on the debit side, minus whatever I've got on the credit side, so minus 67,650, and then I'm subtracting 270,930 to get my X. So this vehicle was sold at a carrying value of, so this amount, guys, my carrying value, the vehicle was sold at an amount of, let's just extend this page a bit, it was sold at 39,600. So this is the amount I take to my cash flow statement. Let's do that. your cash flow statement, proceeds from sale of tangible assets. Again, guys, remember, show your calculations in brackets. You know how to do this. So the amount was 39,600. It is an inflow of cash because if I sold the asset, I received this money, so money coming into my bank account, inflow of cash. Right, we're done with the second part, or almost done with the second part. So I've got a negative, this is in brackets, and then I've got a positive, so I'm obviously subtracting. So let's now calculate what is my cash flow in terms of investing activities. So 222,750 less 39,600 gives me 183,150. So let's take that figure through. In brackets, because it's a negative amount, 183,150. Okay, right, with me. Almost done, guys, with the cash flow. Let's now go on to the third part, which is very straightforward, especially with this question. There's really not much to do. Cash flow from financing activities. Your financing activities is made up of proceeds from issue of shares, and then we're going to look at our loan, our long-term or our non-current loan. Let's start with proceeds from issue of shares. Did this company, Barcelona Limited, did they issue additional shares during the financial year? So back to our question, and we're looking at information, your list of balances, ordinary share capital. That's what's going to tell us whether we've issued additional shares during the year. So my ordinary share capital, if I inspect 2002, my share capital was sitting at 445,500. 2003, it has now increased to 505,500. Okay, so an increase obviously means that I've issued additional shares. Very quickly, always remember, check for share premium. Were your shares issued at a premium? So if I scroll down, there's obviously no share premium. So it's only my ordinary share capital. So let's now calculate the issue of shares, or how much you received for issuing shares. 505. There we go, and we are subtracting 445,500. So we received an additional 60,000 Rand from selling shares. Let's now record that in our cash flow statement. So proceeds from shares issued, an amount of 60,000. Not in brackets because money is coming into the business's bank account. Right, let's move on now to loan. Let's now look at what happened to our loan. Yes, guys, I know I've written down increase in loan, but remember, there could also be a decrease in loan. So let's now go back to our information, and let's now look at what happened to our mortgage loan. Okay, there we go. Mortgage loan. Again, we are comparing 2002 to 2003. In 2002, our mortgage loan was sitting at 330,000. In 2003, there's obviously been an increase because from 330,000, it's now become 450,000, which means we obviously borrowed more money during the course of the year. So let's now calculate what was this increase in loan. How much did we borrow in terms of our mortgage loan? So calculators out again. So again, guys, we're simply subtracting our loan, 450,000 minus the 330,000. So we borrowed an additional 120,000 Rand. Let's now record that in our cash flow statement. So in our cash flow statement, increase, there's been an increase in loan of 120,000. Increase in loan represents an inflow of cash. If I borrow money, that money goes into my bank account, hence it increases the amount of cash I have in my bank account. Right, Ready now to calculate your cash flow from financing activities. 60,000 plus a positive 120,000 is going to give me 180,000. Right guys, ready now to calculate your net change in cash and cash equivalent. In order to calculate that, all I'm doing is, okay, let's just quickly change the color of our pen. So we are taking our cash flow from operating activities, which was a positive amount, then your cash flow from investing activities, which obviously was a negative amount, and then our very last item, cash flow from financing activities. Okay, all we're doing is adding these amounts, obviously subtracting whatever was in brackets. So if we get our calculators out, let's do this very quickly. So we are starting off with, there we go, we're starting off with 20,580. We are then, we've got a negative amount, so we are subtracting 183,150. And then we are adding that 180,000 to get the net change in cash and cash equivalent, an amount of 17,430. So let's enter that. Net change in cash and cash equivalent, an amount of 17,430. Right, the very last part of the cash flow, cash and cash equivalent at the beginning of the year. So let's now go to our information. Let's now go to cash and cash equivalent. There we go. What was cash and cash equivalent at the beginning of the year? There's my amount. Okay, 15,180. So let's take that through to our cash flow statement. So at the beginning of the year, my cash and cash equivalent was 15,180. We can now calculate what is your cash and cash equivalent at the end of the year. So back with the calculator. This was my net change in cash and cash equivalent. All I'm doing is I'm adding, guys. I am adding my 15,180. So 17,430 plus 15,180 to give me, at the end of the year, in my bank account, I should have 32,610. So let's write that down. Okay, so an amount of 32,610. Can we check if we are correct? Yes, we can. We can go to our information. So if I go to my information, if I had to ask, what was your cash and cash equivalent at the end of, let's just get our pen there, at the end of 2003, so your cash and cash equivalent, there's that amount, 32,610, which obviously agrees with my statement. So I know that I've obviously not made a mistake. Okay, guys, that was the cash flow statement. I know lots and lots of calculations, but please remember, whenever you are doing calculations, we want to see use of brackets. You've got to show us your calculations in brackets. Right, we're ready to move on. We're now looking at the interpretation, the ratio analysis. So let's now go straight to our next question. 1.4, we are now going to calculate your net asset value per share for 2003. Net asset value, in order to calculate, I am looking at shareholders' equity divided by number of shares issued. You've got to know your formulas. Right, remember it's for 2003, so those are the figures that I'm looking at. So let's do this calculation. So let's go to our info. We've got shareholders' equity. What is shareholders' equity made up of? So 2003, shareholders' equity will be made up of ordinary share capital, there we go, as well as retained income for this exercise. So these are the two amounts that makes up shareholders' equity. So let's now let's calculate our amounts. My ordinary share capital is 505. 500 plus my retained income is an amount of 111, there's your retained income, plus 111060, and my shareholders' equity is a total of 616,560. So let's take that through. Shareholders' equity is an amount of 616,000. Let's just get that back. 616,560. Okay. Divide this by number of shares issued. Number of shares issued, again, back to our information. So in our info, we've got, let's just extend our page quickly. We've got our ordinary share capital for 2003, which is given to us at 505,500. And we are told our par value is 1 Rand 50. How do we calculate number of shares issued? Absolutely correct. We're going to take our ordinary share capital, divide it by par value. So let's do that. Divide by par value 1 Rand 50. Let's get those calculators out. So share capital 505,500. We are dividing by 1 Rand 50 to get the number of shares that were issued, 337,000. Okay, so let's go to our answer sheet. So our number of shares issued, 337,000. Right, let's now get those calculators out. All I'm doing, guys, is dividing. So I'm dividing 616. Okay, 616,560 divided by 337,000, and my net asset value 1 Rand and 83 cents. If I round off, remember guys, you can also show your answer in cents, and if you do show your answer in cents, please don't forget that you've got to obviously times this by 100 cents. Let's just leave our answer in rands. So my answer is 1 Rand and 83 cents. Okay, because I've rounded off. Right, that is my net asset value. Net asset value, what your shares are worth. Let's now move on to our next question. Your next question, 1.5. Let's read once again. David owns 5,000 Barcelona Limited shares. Mercy offers him 9,800 Rand for his shares. We are then asked, David is not sure whether to accept. In other words, should he accept Mercy's offer? So there he's got 5,000 shares. Mercy now comes along and offers him 9,800 Rand for his shares. Should he accept this offer or not? We now required to explain. So let's quickly look at how much is Mercy offering him for one share. We know what he's offering him for 5,000 shares. Let's try and calculate per share. What is the offer per share? So in our calculation, we are taking the total that he's offering, 9,800 Rand. We're going to divide this by 5,000 to calculate how much is he offering per share. So let's clear that, 9,800 divided by 5,000. So he's offering him 1 Rand 96 cents per share. So let's now write that down. Okay, so he's offering him 1 Rand 96 cents. Now, is this a good offer? How are we going to know? What are we going to compare this to? How are we going to explain? Okay. Absolutely correct, guys. We're going to look at what is the net asset value. So we need to compare this to net asset value because that tells us what our shares are worth. But then we can also compare this to something else. Right at the beginning of the exercise, we were given additional information. Do you guys remember? Okay, let's go back to the beginning of the exercise. Right at the beginning, we were told that the JSE, the price of shares on the JSE, in other words, the market value of shares, is an amount of 2.05 rand. So that is what the people out there are prepared to pay for the shares. You've got people on the JSE, when the shares are being traded, they are prepared to pay 2.05 rand. So let's take that information into account. So the JSE, okay, so we've got the JSE people on the JSE, or those that want to buy the shares, are prepared to pay 2.05 rand for the share. Net asset value, something that we just calculated, it was 1 rand 80. Let's just go back to the answer quickly. Okay, it was 1 rand. What was that net asset value? There we go, 1 rand 83. Okay, so the net asset value was 1 rand 83 cents. So let's now compare this. We've got Mercy, who is offering 1 rand 96 cents, but the shares are worth 1 rand 83. So should David accept this offer or not? Okay, yes, he should. He should accept the offer, because obviously he's getting a much higher amount in comparison to net asset value. So if we say yes, the explanation that we are giving, or the reasoning behind us saying yes, is that the offer, let's just correct that quickly. Okay, so the offer per share, okay, so the offer of 1 rand 96 cents per share is higher than the net asset value, and the net asset value is 1 rand 83 cents. Okay, you guys with me? Right, some of us, however, might disagree. In other words, we might be tempted to say no. Okay, let's look at those that would say no. Let's just change the color of our pen. So if we say no, again, Mercy is offering 1 rand 96 cents for the shares, but if I had to trade the shares, if I had to sell it on the stock exchange, the JSE, someone out there is ready to pay 2 rand 5 cents for my share. So immediately, because the JSE price is much higher than what Mercy is offering David, David might just say no. Sorry, I'd rather sell the shares on the JSE, I'm going to get a much higher price. Right, so the reason for saying no is, if we look at the offer, and let's now write this down, our offer, which was 1 rand 96 cents per share, let's just extend the page there, is lower than the JSE price, or the market value of, let's go back there, the price on the JSE was 2 rand and 5 cents. 2 rand and 5 cents. Okay, right, please remember grade 12s, for this type of question, your answer could be a yes, your answer could also be a no, but it depends on what type of information they're giving you. If they're giving you just the net asset value, you're obviously just comparing the net asset value to the offer that is being made. But if they're giving you the JSE, then you've got to look at what the market, what the people out there are offering for your shares. Very, very important is not just writing down your yes or no, but your explanation. Why are we saying yes? Why should he accept the offer? Why are we saying no? Why should he not accept the offer? Okay, grade 12s, that's all the time we have for today. Unfortunately, we couldn't complete this question, but please remember, the more you practice, the better that accounting result. From me, Mahesh Lal, it's time to say goodbye. God bless, good luck for prelims, and keep on working.